Okay, so what the hell happened today? You may have noticed that the stock market today has rallied quite heavily, and to be fair, that is an understatement if ever there was one. It has gone up by almost 10% in a single day. That's the S&P 500. The Nasdaq is up 12%, and the Dow Jones not far behind at 8. This is almost unprecedented levels of increases, and so it really stands to reason that we need to break down exactly what has happened. Now, what we see is we can see the stocks themselves have increased, and it is all related to the recent tariffs. As the original tariffs were blanket across all countries and industries, there was effectively no hope of making products affordably from other countries, and so people would have to wouldn't be able to buy as many because they'd be spending so much on every single individual product. But now that we have new news that these tariffs are being removed, or at least mainly just being pressured on China, it opens up the door for a lot more international trade than was otherwise first expected, and does put a genuine dampener on Chinese goods. It's interesting that the decision was made not to go directly for China originally, and it might have been a play to wither the storm of political unrest purely against China. So now that everyone's less affected, they're not really thinking about the whole China issue, whereas if it was purely on China, they would continue to think about the China issue for many years to come. That might be why he did it, but that's not what we're here to discuss anyway. What we're here to discuss is mainly why it is so important to never ever panic sell. If you're a long-term investor, a smart investor, or someone who's looking for a good retirement, all of these reasons, or even saving up for a down payment on a house, for all of these reasons, you really should never panic sell. And you should make it as difficult as possible to panic sell. You see, if you would have sold at some point while it was going down, then let's say you sold when it was down 3%. Then the market started to rally a little bit. So you start to think it's going back up again. You buy and say 2% down of where it originally was. And then it continues to drop. And perhaps you sell, perhaps you hold. But let's say you hold in this occasion and it rallies back, sure. But what you've effectively done is you've lost the 3% from when you sold, and then bought back at a slightly higher -2%. So in effect, you kind of lost about 5%. Whereas if you just held it, you would be back exactly where you were to start with, rather than having made a loss. Losses are only realised once you've actually sold. Now, don't get me wrong, that's a very dangerous mindset, especially if you're trading individual stocks. But if you're trading on entire markets, entire countries, then unless there is some major catastrophic event that could genuinely destroy the entire country itself, there's really no need to panic. Keep in mind that even in a catastrophic event, American businesses will still continue to do business, especially now as the vast majority of them are tech-based. Those tech-based companies can still operate and sell products even during wars. So to immediately panic and think that the companies themselves aren't going to make a profit even during harder times is rather silly and short-sighted. So let's take this as a lesson and a piece of advice and really focus on what our investment goals are, what our investment strategies are. Because at the end of the day, your individual timing of the market is not really going to play that big of a factor, especially if you're looking to invest in the long term. Because over time, sure, if you invested at the perfect time, you might have made an extra 5% one year, but that doesn't really mean anything in the long run, because it was 5% more in the first year, but the second year is as it states, and the third year is as it would have been the fourth year. So it doesn't compound in the same way that other increases do. So from that viewpoint, we really have to plan our investment strategy, because if we have a clear and functional foundation strategy, then the timing of when we invest really shouldn't have that much of an impact. As long as we just continue to hold, leave them where they are, let it sit, let it grow, then over time we will become far, far, far richer and more successful. And keep in mind, at the end of the day, the simple fact that you are investing, or at least are learning more about investing and intelligent and sensible investing, then you're already outperforming so many other people out there in the world who just think the stock markets are for rich people off in New York somewhere, when they're really not. They're an absolutely incredible tool for building up yourself to have a great amount of income, especially when you're looking towards retirement or buying a house or other large life purchases. Perhaps even you want to start your own business. Well, you're going to need a lot of capital to fund that. What's a good way to do it? Put 10 grand in the stock market, leave it a couple years, and then there you go. There's your opening capital. So it really is so pivotal that we focus in on our strategies for what we want to achieve financially. And when we hear about these market changes, it can be funny, and I make jokes about it on all my shorts videos, but we shouldn't be reacting to it. We shouldn't be selling, we shouldn't be panic changing our entire strategies. Keep them consistent, keep it the same as it was. And remember that eventually it should just continue to go up. Even after years, even if we have 4 years of chaos and uncertainty, at the end of those 4 years, I highly suspect the stock market will be higher than when it started. So, during this time of uncertainty, keep that in mind and continue to invest in an effective investment strategy. Ooh. Hello. Hello. My light's turned off. Continue an effective investment strategy and make sure that we have a good plan and we're following that plan every single month. Month after month, just dollar cost average. So we need to do, and so we should be doing, and it will make us far more money in the long term. Time in the market beats time in the market every single time. You're not Warren Buffett, I'm not Warren Buffett. Let's stop pretending we are, and let's start allowing ourselves to have that money invested and grow naturally. Sure, we might find a lucky stock that could make it grow far quicker, perhaps, but it could also crash and burn, leaving all of our money sat where it was. If we are going to do the long play, then we need to think about it over a longer term, rather than just investing from short-term sudden decisions and panic choices. We need to think about what we're doing, we need to plan out what we're doing, and we need to stick to that plan. If we don't, then we've got nothing to show for it. So, anyway, that's going to be all from me. Hopefully, you are recalibrating, maybe reconsidering your personal investment strategy, maybe planning for the future slightly more efficiently. But other than that, stay the course, keep it invested, watch the markets, do what they do. And eventually, you will see that compound effect really multiply. Don't panic. Don't short sell. Don't over leverage. Don't put too much risk into it. Just every month, from however you get paid, put whatever the amount is into the stocks and watch them grow. Anyway, have a wonderful day and don't panic. All the best.